back in Canada, the second of the big five, or six if you count the Bank of Canada banks, to report earnings came out today. That bank was CIBC, the Canadian Imperial Bank of Commerce. They had $2.60 per share, but that's down from $3.61 last year at the same time. But there's some reasons for that, so we'll get to that, because actually most of their categories are up. See, CIBC bought a Chicago-based wealth management firm in June. That cost them $5 billion in cash and stock, so that took a little bit of money off the table for them. The dividend actually increased 2%, roughly 2% to $1.30 a share. Now, their core Canadian banking was up 8%, so that's great. This is their home turf. This is where they're trying to obviously stay fairly dominant. They're definitely one of the big banks around here, obviously. So an 8% growth is excellent. That's exactly what they're looking to do. And by branching down in the United States into the Chicago wealth management firm, that further extends their reach internationally. And CIBC definitely has the staying power to be able to continue to expand, much like the other five big banks in Canada, not counting the Bank of Canada. So Canadian wealth management, though, was down 73%. What? 73%? I mean, we seen a drop in RBC when they reported, but 73% at wealth management, is it really doing that bad? Are people really poorly doing in the stock? It's just not happening. They're just not managing. Never mind. See, last year, the ACI transaction actually brought in $383 million in this same category, which really skews this number when you look at their wealth management. They're actually up. They're actually up 10% year over year, not including the transaction to bring in ACI last year. So, on an earnings call that we were hoping we were going to get good news, it turns out 2 out of 2 banks so far have reported very good news in Canada's financial earnings season. Let's see how TD, the Bank of Montreal, and the Bank of Nova Scotia stack up to these first 2 calls. CIBC doing all right, but still a bit of a middle-of-the-pack bank. I think I would still probably lean towards, if I was talking to someone, I would just lean towards the breadwinner, the top dog. Just saying. They've just got a lot more stroke. CIBC is a heck of a bank, though, doing a heck of a job expanding in Canada, wealth management up. You gotta like all that. Dividend got raised. For all the shareholders out there that do like CIBC, that bank at CIBC, the dividend getting raised per share is always a very good sign. Canada, 2 good bank calls. I know we're waiting on more. There's another shoe and then another shoe store to drop, but we could be turning this corner. Just because our housing market's hot in a couple provinces, don't fool yourself and think that all of Canada is doing really well. Canada as a whole has a long way to go from a recovery from natural resources taking a pretty serious hit. But I think our big banks are definitely going to be the front runners to help pull us out of this. They are the leaders in this industry. CIBC with a good earnings call.